At least the weather is better than. Oh, there we go. All right, we're good. All right, so I'll call this meeting to order at 6:06. Roll call, please.
Member Peter Sierra,
Present.
Member Dennis Garcia,
Here.
Vice Chair David Vanderpool,
Here.
Treasurer AJ Patel stated he would be absent this evening. Councilmember Jessica Voigt,
Here.
Mayor Pro Tem David Finn.
Here.
All right. Any one person may address the committee on any matter not on this agenda. If you wish to speak, please fill out the public comment form provided at the back table and give it to the committee chair or city clerk. There is a 3-minute limit on public comments. There will be no sharing or passing of time to another person. State law prohibits the committee from discussing or taking actions brought up by your comments. All right, I don't see Pledge of Allegiance on here, but I do think we are supposed to do that. So, Dennis, do you mind leading us in that? I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. All right, now we're moving on to our action items.
Vice Chair, could I interrupt for just a minute? Could I
Yes.
just check to make sure we don't have any callers on the line?
Yes, go ahead.
Thank you. Grace, do we have any callers on the line for public comment on items not on the agenda? Grace, can you hear me? Do we have any callers on the line?
There are no callers on the line.
Thank you.
Okay. All righty. Let's move on to the reorganization of the committee. So let's see here. All right. So Nicole, you want to give a blurb about that?
Sure. Annually, the committee has the opportunity to reorganize, appoint a chair and a vice chair. And so the chair would have the responsibility of leading the committee. Vice chair would fill in if the chair could not make it. And so the process would be a nomination process. We would take all of the nominations and then vote on them individually.
Okay. So the recommended action is selection of a chair and a vice chair. Does anybody have any comments or recommendations?
Can I make a comment, sir?
Yes.
All right, so being an elected official, and maybe I'm speaking for Jessica when I say this as well, but we'd like to encourage our public members to fill those roles, and that way you get an opportunity to serve a little bit more accountability, and a little bit more experience that may entice you to do more in the future. And so my recommendation is if we could have perhaps one of the three of you volunteer, or even still consider our treasurer to be a chair for that. But I will state that I do not want to do that due to all the other responsibilities that I have being on the city council.
Thank you so very much. Are there any other comments before we move on? Or volunteers? I mean, I didn't want to nominate myself, but I guess I will.
Why not?
I'm happy. I'm happy to be the chair if you guys are good with it. And does anybody who wants to be vice chair?
I wouldn't mind doing it.
Okay, sounds good. Basically, the biggest thing you're going to be doing is doing what I'm doing right now and going over this and kind of leading it. So.
We need to take
Okay,
a vote.
with that, can I make an official motion that that I move that David Vanderpool be the chair and Peter Sierra be the vice chair?
I'll second.
Okay, and I'll do a roll call vote. Member Sierra?
Aye.
Member Garcia?
Yes.
Member Vanderpool?
Yes.
Councilmember Voigt?
Yes.
Mayor Pro Tem Fenn?
Yes.
Thank you.
Okay, so now we're moving on to approval of minutes. So those of us that were at the last meeting, let's take a look. So that would be Congressmember Finn, Dennis, let's see.
So I have a point of clarification question on this. So
Sure.
since we have new committee members that have not been on there, do we have a quorum that can vote on that? Or is it okay that they vote to approve those minutes? Do they have to have attended the meeting to approve the minutes?
They can technically have watched the previous meeting compared to the minutes to confirm them.
Okay.
Okay,
So with that, I'll move to approve the minutes.
I'll second.
Nicole, as a point of clarification, if I did not watch the previous, however, read the minutes, is it okay to confirm the minutes? in the
Yes,
vote?
if you read through them and you confirmed
Very good.
that it's all, I mean, there are points of it where you would have to, I guess, confirm that it matches the meeting. If you felt more comfortable, you can abstain. And then we can also push this to the next meeting for approval also, to give more time if needed.
Yeah, Dennis was here. So you have three. Yeah, you have three.
Yes. Yes, yes.
Cool, I'm good. Okay.
Okay, I'll do roll call. Member Sierra?
Yes.
Abstain.
Oh, abstain.
abstaining.
Sorry.
Member Garcia?
Abstain.
You were
Vice-
here, so you could say yes.
Yes.
If you want
Yes.
to. It's
Yes.
up to you. That's okay.
Chairman Vanderpool?
Yes.
Councilmember Voigt?
Yeah, abstain. I did the same
And
thing.
Mayor Pro Tem Fenn?
Yes.
Thank you.
All right, excellent. Okay, so next, we've got Mizzy Station up for the fiscal year 2022 to 2023, third quarter cash and investment report.
Yes, thank you. Good evening, committee. It's good to see everybody. If it is okay with the committee, I would like to do items C3 and C4 together. I've created a presentation that kind of goes over both, and so maybe we'll speed up time a little bit for
You
you.
said you want to put who together?
C3 and C4 together.
And C4 is the quarter budget? Yeah, that's fine by me. I don't have an issue with that. Does anybody else have an issue with that? okay.
And I've put a presentation together if they can share that. There we go. Okay, so let's go over our third quarter budget update financial status report. We will be reviewing summary of cash balances, general fund revenue detail, general fund expenditure detail, and wastewater fund revenue and expenditure detail. And what you see here are the city's bank balances as of March 31st, 2023, and the activity that has taken place within March. One thing to note is the Bank of Hemet Workers' Comp account was closed, so the account was no longer needed. The city used a company named Sedgwick for workers' comp claims, and Sedgwick pays the claims through their own accounts and then invoices the city for those claims. So the bank account was no longer needed and therefore closed. And those funds, when they were closed, they were deposited within the Wells Fargo general checking account.
Okay.
Let's move in. Hold on.
Any questions or comments regarding that?
I do just have one question. When Sedgwick now invoices us, do we have a program budget for workers' comp specifically? Or is it, I got to get used to this program and not line item, but is it allocated that way, or how are those funds being withdrawn and from where when we're invoiced from Sedgwick's?
So there is, it's under the HR risk.
Okay, there we go.
Yeah, yeah. And there's a projected amount that's put in for budget.
Okay, very good. Thank you.
Okay, so moving on, this is the bank balance including investment accounts for each month of quarter three. And so as you can see in here, the workers' comp account ends with a zero balance. The activity for investments to note for the quarter is a maturity of a CD that was held with Bank of Hemet. That CD matured. It was used as collateral for a piece of equipment that was purchased quite a few years ago, and that equipment has since been paid off, and the CD has matured. Of course, the rate that we got into it was not as good as what our investment portfolio is. So we went ahead and closed out the CD, and those funds were then deposited into the general checking account with Wells Fargo. One thing to note is that our funds held within Wells Fargo are attached to a sweep account. And so that sweep account, what it does is it takes in monies that are held in the checking account and invests them into overnight securities and then pays an interest for that. So the money is constantly being invested per our investment policy. For LAIF, our payment we received for quarter two earnings were $253,262. Net income received for the portfolio managed by public trust was $145,461, and interest earned for the quarter with the Wells Fargo sweep account is $290,060. This is the one benefit to the rates increasing, is that you're starting to see better investment rates for your funds that are held in the investment portfolio.
Ms. Eustachian, just one question, just for us that are brand new, I'm sorry, but what does LAIF stand for, LAIF?
Well, that's the Local Agency Investment Fund, and so that's a state investment program the agencies can all contribute to. It's a pool.
Thank you.
One thing to note on here, too, is we didn't have the PARS balance for March 2023. That was not yet available, so that is not included in your reports.
And if I remember correctly, let's see, I'm trying to look here, C34, the quarter budget, because we're going to be talking about the investment policies later on. So that's fine, we'll hit that there. All right.
Yeah, and this is it's a pooled
Right.
investment. So you have pooled cash, which goes over all your funds. So any interest that is earned is then allocated across those funds based on their cash balance at the time of the interest payment.
So I'm interested in learning more about that sweep account. So could you go over one more time what happens with that sweep account?
So it's an account that's tied to your general checking.
Okay.
And it essentially moves dollars that are available at the end of the day.
Okay.
It puts it into the sweep account. It does overnight security purchases. Usually it's treasury
Okay.
bills. And then so they give you an interest earning for that. And then it gets actually swept back into the general checking as you need to use those dollars.
Okay, so
So
it
you-
maximizes your use of.
Right. So there's no idle funds not earning essentially any type of investment return. And it's very safe. So it's within your investment policy.
Okay, that's good. That is excellent.
All right, so now we're going to move over to the budget portion, the budget to actuals, what we have for quarter three. And so so far the city has collected 68% of the budgeted revenues. Miscellaneous revenues actuals are higher than budget. And again, this is for what we're seeing with the investments. A portion of that also, too, is a reversal of a prior year GASB 31 entry. And now GASB 31 requires the city to mark their portfolio to market rather than to book value. What it does is basically you have to record unrealized gains or losses in a fiscal year, regardless if you're going to realize them or not. In this past year, it was more of an issue because of what was going on with the market, where everything was. So what we did is we reversed that entry to put it back to our book value,
Okay.
which then has that dollar amount increase. Now, again, at the end of this fiscal year, we will have to, again, mark to market. So depending on what that looks like, it might not be as much of a dramatic decrease or increase. It could go either way. So, we'll see how it ends up at the end of the year.
And this is under which of those revenues?
That's your large amount in the miscellaneous. I've
Oh,
highlighted it, the
miscellaneous.
2.9.
Okay, I see.
Yeah.
That makes sense, okay.
Right,
That's
so
why it's so huge. is
I'm
because of that.
trying to, and I try to point out what's so off, or what's,
Yeah,
the
because that's a
percentage is a
huge
difference.
981%
Right.
change.
And so that's a big portion of that.
Right.
The only time that you would have any realized gains or losses is if you sold securities before maturity, right? And so if, if you're had to sell off your whole investment portfolio and you took an unrealized loss, what they wanted to show on your financial statements is what would that look like essentially. And then your other financing sources, that was due to a sale of land that was not included in the budget. So that's why that dollar amount is higher as well.
So what ends up happening with the miscellaneous? So you said at the end of the year, you have to go back to book value?
So at the end of the year, we'll make another entry to bring it to the mark to market.
Okay,
And so depending on where the market is at that time. So it's as of June 30th. So depending on where it is on that time, it depends on what the entry will be.
okay, and then we'll have to analyze that.
Yeah. I'm not a huge proponent of that GASB because I just don't agree with it, because you're not necessarily going to realize all of your losses of your portfolio at time being. So it's just a picture of what it looked like at a certain point in time.
Do you have any estimates as far as what that will look like?
Currently, I don't. I do believe it's within some of the attached investment reports, which I could go back
Yeah,
and look to
that's
bring
fine.
back to you.
Okay,
Yeah.
that's fine.
Misty Station, could you clarify what GASB is, or is that a?
Oh, Governmental Accounting Standards Board.
Okay,
So
thank
that's what we have to go by as far as how we record entries for governmental accounting.
So let's say theoretically, that lowers back so that the actual goes back to, let's say, like 1.5 million, let's say, at the end of the fiscal year. What does that mean for the following year's budget?
So if, and I should step back a little bit, I have put in an estimated actual in here next to it. I have a 1.364.
Yeah, okay.
So that's
Right.
kind of what I'm estimating it's going to be at the end of the year, even
it.
with that entry. If I can, have my crystal ball, right? So, so
Right.
my best guess,
I understand,
essentially,
yes.
best
Okay.
estimation, yeah. So what would happen in whatever the entry is, that you would see the reversal in the next year as well. So if it's going up or going down, that would be, as of the next fiscal year, you would see that impact in the next year's budget
Got it.
on your actual side.
And then council can do what they need to do
Right,
regarding the budget.
Right, correct.
balancing.
But as you can see, there's an estimated actual that is much larger than what your actual beginning budget was.
Right.
And that, again, is because of the increase of the rates that they have gone up this fiscal year. So it has brought a substantial more of investment revenue.
I mean, we're doing better than Silicon Valley Bank, so there you go. All right, fantastic. Thank you for your answers. Any other questions?
Okay, well, I'll move on to expenditures. So this is your general fund expenditures by your departments. And so City Council approved a budget amendment to appropriate surplus fund balance to many needed capital projects. And you'll see that in the non-departmental, right there that's highlighted at the very beginning. It's at such a low percentage rate because those capital projects take time. Right, and so we'll move those dollars as needed or by the end of the year into the capital projects themselves, where they'll sit available for the project's expenses to start coming through. Other departments that have been highlighted include economic development, risk and HR, and fire. So economic development has a program budget line of $500,000 to create a downtown incentive program. That program is starting to get going now, and so you'll start to see those dollars spent, as that goes on. Risk and HR, most of their cost is for the insurance, which is paid in July, and so that hits very at the front of the year, and so it puts their percentage of expenditures much higher than the other departments because a large portion of it is paid up front. And then the fire is at 22.6%, and that's because we have only paid 1 quarter of invoice the county is behind on their invoicing. So the actual is only for 1 quarter, and we're not at the 3 quarters of what I'm reporting on.
One question for risk and HR, just so that I know the process. Is there a percentage of the insurance that is paid up front, and then a percentage, so is it like twice, or is it all front loaded?
It's all front loaded. It's an annual payment,
It's an annual
one-time annual
payment.
payment, yeah.
Okay, thank you.
Any other questions or comments?
So interesting that fire wouldn't do the same.
Well, and
It
you
just
know
makes
what,
no sense.
and
Why
they-
wouldn't you? It's a contract. I mean, it's a set amount. Why wouldn't you just invoice once? I don't
Right,
know.
and I do believe, and I think it's an estimated amount for the 3 quarters, and then they true it up in the 4th quarter.
Okay.
And so that's kind of how they do it, as things change. And they have to look at the personality, maybe overtime or direct costs that they are associating with the invoice, but when it goes to the overall, like overhead charges and things like that, it's an estimate, and then at the end of the last quarter billing, they true all that up.
Okay, very good. Thank you.
Okay.
All right. And then, so this table provides expenditures by type. So the personnel costs make up about 63% of the actuals to date. Operating costs are about 33%, and capital at 3%. Currently, there are no categories over budget. However, with estimated actuals, it's putting utilities, fleet costs, and other, which is your insurance and equipment leasing, at a risk of exceeding budget. But the overall net effect, as you can see at the very bottom, your current budget is 80.4. That's because it's got a large part of those capital improvement projects that were put in there, and your estimated actual is about 78.5. So you'll still, overall, the fund will remain within budget. There are no questions with that. I can move on to wastewater.
That gas bill got us. No, I'm just kidding. I'm just kidding.
Yeah, I'm looking at utilities really quick here.
Yeah, it's your utilities and it's your fuel costs, right? Fuel.
Okay. Yeah, that looks.
Okay, so now getting to our wastewater fund. The wastewater revenues, they are collected in arrears. So July billing is accrued back to prior fiscal year, and the first billing for fiscal year 23 was collected in September. That billing is bi-monthly, and so as of March 31st, wastewater fund has collected 67% of its budgeted revenues. The cost recovery line has collected more than budgeted currently due to a manhole repair agreement with Perricone Juice that was invoiced and collected, and that was not in budget. And the miscellaneous revenues category has collected more than budgeted from, the interest earned on the wastewater fund. So when we first were starting to work on budgets, interest rates were extremely low. And so as we are starting to realize that, you're going to notice that those lines will remain above budget. Wastewater expenses as of March 31st, total about 7.9 million, which is 57% of the fiscal year 23 budget. Personnel costs make up 22% of the actuals to date. Operating costs make up close to 29%, and capital costs make up about 3%. And the contingency makes up less than 1% of budget. Transfer outs in here is where you see your overhead and debt service make up remaining 45, or about close to 46%. And the debt service payment on the 2018 wastewater revenue bonds is due on September 1st and March 1st of each fiscal year. The September payment consists of principal and interest, and the March 1st payment is interest only. Both debt service payments have been made. However, the March payment is not reflected in here because it is recorded in the reconciliation process that happens in April. Currently, no categories are over budget. I have highlighted, though, very similar, that utilities and fleet costs, again, are potentially going to be over budget by end of year. Overall, though, the fund should remain within budget based on estimated actuals.
A question on that. So if we've got a line item or two that's out of budget, as long as the overall budget is good, that does not need to go back to council
No,
for
no,
for an
correct,
amendment?
as long as it remains within for the overall fund.
Okay, thank you.
Yeah, your general fund is by department, but all other funds are by fund.
Can you go over one more time about the cost recovery? I know you mentioned it, but it was kind of fast and I couldn't hear. Why are we at 340?
Yeah, there was, and you should have had Thaxton here, he could have answered this better than me, but there was a manhole repair that was, we received revenue, I believe it was on the Pericone Juice property, and so there was a charge for that, and we received revenue for those charges, for the cost.
Okay, thank you.
And with that, that wraps up my report. I'm available for any other questions that you have.
All right, so let's see. For that, it is, so it's receive and report, right?
Correct.
So any questions or anything, or comments or anything like that? Oh, yeah, that should probably go. Any public comments?
I don't have any written ones, but I will check with Grace. Grace, do you have any callers on the line?
There are no callers on the line.
All right, any other questions?
No, Mr. Chair, I move that we receive and file our third quarter cash and investment report along with the third quarter budget update and financial status report.
All right, I will second.
Member Sierra?
Yes.
Member Garcia?
Yes.
Chairman Vanderpool?
Yes.
Councilmember Voight?
Yes.
Mayor Pro Tem Fenn?
Yes.
All right, so next up, we have the 2023 City of Beaumont Financial Policies. Go ahead.
Good evening. It's nice to see you guys again. It's been, I can say, since last year. What I'm presenting tonight is the 2023 City of Beaumont Financial Policies. As part of our budget process this year, the Finance Department reviewed all the policies, and during the course of the year, we've also been updating policies, and we've added some new ones to the policy manual. So what you'll find in the attachment, everything that we've added or we've updated and changed, it's all redlined. Everything new, obviously, is in red. And then the three policies that we added to the manual this year are the confidential funds, the unclaimed money, and the deposit-based funding, which you'll see their title inside the document is all bold and red. So you'll know that those are the new ones. Financial policies, which are adopted by City Council, provide written guidance for how local government officials and staff should approach fiscal issues and core financial areas. The financial policies will also be used during our audit process. The auditors take this to address risk and basically follow if we're in compliance with what our policies say. What we're recommending is that we review and discuss changes to the financial policies and recommend modifications or recommend moving it forward to City Council for approval. So I'm here to answer any questions.
One thing I'd like to add too to this is that what has been happening normally is that the policies would come individually, but that kind of gets hard to track. So what should be happening is you have a policy manual, you keep all your policies in there, and annually, as a part of the budget process, this come forward for review, and any updates made on an annual basis.
So I've got a question if I could jump in.
Yeah, go ahead.
All right, so page 69 of our agenda, under section 4, says fund balance policies. So the red, we have some crossouts, so when the red, colored verbiage, it talks about working capital reserve requirement to remain at 16% of the operating budget. Can you address that a little bit in terms of how does that compare to like state requirements? I know we had a discussion on this before. What I get confused is, did we discuss it in this committee or was it the council and so forth? But just to educate this group, is that 16% a good and safe number in terms of a budget requirement?
I believe so, and I thought we discussed that at a council meeting, right?
It was at a council meeting.
Yeah.
We discussed all the different fund balances. 16% is the recommended amount by GFOA, which is your Government Finance Officers Association.
Okay, all right.
Yeah, yeah, and the additions of that came from that council meeting where those discussions took place.
Okay, all right. So then that helps then this group that it kind of
Yeah.
top-down approach
Yeah.
on that one.
Yeah.
Okay, all right, thank you.
I have
Yeah,
Another question really quick. So is that, so 16%, is that what other local governments generally have?
Well, and, you know, each government can decide on their own. It depends on, basically what they have going on. So each government is different. So if they have maybe a reason to need more capital funds or something along that line, they might have a higher reserve level, or maybe their revenues are not stable. And so that could also, you'd want to have excess or available cash in case, you know, those revenues don't come in as planned. So you could have a higher level.
Right.
You probably won't want to have a lower, but you could have a higher level, but that would be a council-to-council decision.
And why did council come up with the 16%? Is it just because that's the requirement, or is that just?
Well, and originally the discussion was that having at a higher level, 25%, but the reason for the 16% is that's a working cash flow reserve, and what that does is that your revenues don't always come in at the same time as what you have expenses, especially at the beginning of the fiscal year.
Sure.
In past, previous years, and it's been a little bit different since sales tax has increased more, but in past years, you were using that cash flow reserve up until maybe November, December, because your revenues come in at different times. Specifically property tax, right? So you have that coming in January. Your sales tax is always behind. So, you know, all those revenues are coming in later, but your expenses are regular. And
Right.
so for each one, so having those reserves allows you to meet your ongoing operations without having to count on those revenues to come in because they're going to come in later.
Got it. And in past years, the 16% has worked well, I'm assuming.
Right,
Okay, so
right. And
therefore
it's
that's what-
exactly. And since the addition of the budget stabilization reserve, which would allow for any economic downturn that you would
Right.
have from recession or something like that, there is an amount applied from discussion that was put in for that.
Okay.
And that just kind of helps offset any of the cash flow issues that you would have.
Got it. Thank you. I just wasn't sure why we were at that number. I just wanted to know the thought process. Thank you.
yeah, and I think one thing to tail on that, just for this council, or this committee's sake as well, is that we've also established, which you'll note on the next page, for repair and replacement. So that'll be 25%. So in our wastewater treatment plant discussion that we were having earlier today, that's our goal for cash reserves there as well, is that 25%.
Okay.
Can you highlight any of like the major changes that were done maybe? Do you have like any specific policies? You said there were
I
a
would
couple
say
that
the capital
added-
assets policy has a significant amount of changes to it. We looked at that one, we kind of enhanced it more and went a little bit more with GFO recommendations on that one. A lot of the CalCard one, that is just kind of updating for, we've kind of gone a little bit more electronic with that, so we wanted to upgrade, update the changes on how that process works. And then the big ones are the additions, because those are new.
So I'm interested in learning about the process in which this was updated. So who is the person, who are the people, I'm assuming multiple people, that worked together to make these changes?
We had multiple staff work on various policies.
Okay.
And then Jennifer and I have read through them, and we've sat down with the policies as well to put them together.
Okay, so they're originally written
So,
up by.
yeah,
okay,
it's
the
by
staff,
multiple people, and then we review it.
and
and-
you review it.
And
Yeah.
the Government Finance Officers Association, a lot of your different policies do make recommendations, which we would turn around and recommend the same.
Yeah.
Okay. All right, thank you. I just was interested in that process.
It's a good question.
Any other questions there? Let me look through this and see if anything pops into my head here. Oh, yeah, you're right, capital assets, that's what I discussed.
There's a lot of red in there.
Yes. All right, any other questions? Okay. Oh, go ahead, yeah, you can make a motion, that's fine.
All right, you guys, I will make a motion then to recommend moving this forward to city council for approval.
I'll second.
Do a roll call. Member Sierra?
Yes.
Member Garcia?
Yes.
Chairman Vanderpool?
Yes.
Councilmember Voigt?
Yes.
Mayor Pro Tem Fenn?
Yes.
Thank you.
All right, so, oh, I guess I should ask again, do we have anybody on the line?
Yes, I'll check in. Grace, do we have any callers on the line?
We have no callers on the line.
All right, fantastic. C5 is done. So now we move on to the long-term financial forecast. And Jennifer, you're up again.
Yeah, lots of talking
Busy
tonight.
night.
It is. And I have a presentation on this one too, if you could bring this up. So a part of the budget process is to do long-term financial forecasting. And so the use of this is it gives a guidance as to, and it's not exact, but it just gives guidance to say, okay, well, where are we going and are we sustaining financial result? Are we good in our finances? Regardless of decisions we make from now on, where we're at now, if we put in assumptions, are we looking to be good or okay? The thing is you really want to check if something's off or you see that you're going negative, or what we had in our previous workshop was maybe a decline of reserves or being below where you want to be, you can address them in a timely manner. And so we've worked with consultants to come up with a good financial forecast, and which for the general fund, this will be provided this evening. And the recommendation from the Finance Committee would be to review the assumptions that were used in these forecasts and then provide a scenario that we would like to see proceed for the budget planning process. So with that, we'll move into the assumptions that were used. And when they speak of baseline, they're talking about where they start in their projections. So I know this is kind of a big list, but looking at your expenditures, where are these assumptions coming from? And they are actually, each line item is looked at to determine what would be a good assumption for the specific cost. And so you can see that we are looking at salaries and wages and benefits based on what provided in the current MOUs and what we're seeing coming up. PERS, UAL, you can get a lot of this data from PERS themselves. All the operating costs too. This is an estimate based off of the consultants' guess at the time, as well as working with staff to determine if they think that's a good assumption to use. And then they'll plug that into the model and see how it goes moving forward.
One quick question on that with regards to the salary and wages. Is the cost of living increase included in there?
Yes,
It
yeah,
is?
that would be.
Okay, thanks.
One other question I have, who's the consultant?
So we worked with a financial consultant. He was with us at more so the beginning of the fiscal year, who worked on this model. And then we worked with GovInvest, who did our different scenarios for this. And GovInvest is our financial forecasting software that we just purchased. And that will be a software that we can use live starting in May of this fiscal year.
And so this consultant, was he a part of a firm or was he just, how did that?
He was an individual contractor.
Oh, the individual
consultant. Yeah.
contractor, okay, sounds good.
Yeah.
And the main, I'm just interested in finding out, so the main program you're using to do this is GovInvest?
Correct.
Okay.
Correct.
And is that a pretty standard program that's used by other cities as well?
Yeah, a lot of cities have started picking them up. So there's different modules that go with the GovInvest forecasting. They have a pension module, as well as a labor costing module, and then their financial forecasting module.
Okay, thank you.
I've got a question if I could ask. So on that breakdown list on vehicles, having a son in the industry and hearing of all the increases and how much vehicle costs have gone up, That 2%'s too low.
And these might be a little
That's a good point.
optimistic.
Yeah.
And exactly, if you think, because looking, some of these might not be with what the rate study consultant was
And I
coming
can
up with
understand
either.
that if we didn't have a need for a vehicle, or if the city could say, okay, maybe we can buy a little longer than, and not replace this one vehicle and only do maybe, let's say 5 were budgeted for and they only bought 2, then maybe percentage-wise, it doesn't seem that much of an increase because you're only paying more on 2 vehicles versus the budgeted 5. But that number's too low.
This is 2023.
Yeah.
This is the baseline, right?
It is. So 2022, 23, what we would be, getting for the vehicles, or what's in
Yeah,
budget for
so,
22,
and I don't know
23,
off the
and then
top of my
moving that
head, you
forward,
know,
yeah.
what is needed next year for new vehicles, or if it could be pushed out and so forth. But
I
just,
think you
that's just
have-
something that just jumps off the
Yeah.
page at me, so.
And I think you've hit a good point in what we have been seeing and what's going on with the vehicles in the fiscal year. And so you're right that 2% still might be low. I think it was optimistic in thinking that eventually the demand would lessen and then reduce maybe that inflation cost
Yeah.
a little. But again, if you're seeing something different, we can for sure change that and put in a different percentage.
And then, and I don't know how to find that or justify it and so forth, but I'm just thinking that hits council, somebody's gonna say something too. And then that thought process across the board then with furniture and fixtures and building maintenance and that sort of stuff, is that really at the 2% or are we closer to 5 due to inflation? And so I don't know if that can be relooked at or just a phone call back to say, hey, you sure before we take this to council that I would be okay with moving this forward if that's what we're at, but it's a little suspect to me.
Right. Well, and it's because it's taking like the current fiscal year where we're at now as the baseline. And so we have already seen some of those higher
Gotcha.
prices
And then it's just
included in
expecting
there.
what it's gonna go
And then
for,
just
as you point out.
where it's going
Yeah.
forward, right. So, and if this committee thinks that inflation is going to remain high for a longer period of time than what is reflected in this, we could always change that as well.
Yeah, because I'm guessing, and I don't necessarily know this, but the Federal Reserve's target rate is 2%. So I think what they're, in terms of inflation, so I'm guessing what they're thinking is that you have higher inflation, and then the Fed eventually gets it under control and get you back.
Gotcha.
That's what I'm thinking. I don't know, is that, am I?
No,
right
you're
on
really,
that?
yeah, you are. That's correct.
Okay. So I guess we have to just wait and see what.
And this is done on a yearly basis, right?
Yes,
Okay.
annual basis,
Fair enough.
correct.
Okay.
Okay. And then moving on to revenues, there, again, we look at each and every revenue source. We do have consultants like HDL who assist us with our property tax and our sales tax. So we go ahead and we use their forecast that they have, and then we have projections beyond that. You'll see on the half percent sales tax public safety, there's per Coleman. Michael Coleman is someone, he's works with the League of Cities. He's very well known in the financial industry. He has his own webpage on government finance. And so he's a knowledgeable person who puts out a lot of different reports and estimates. And so those are used a lot of times by all the cities in California. And then your other taxes, there's it's a small percentage for each increasing. But what was included in the baseline is what's being seen now, and that's a slowdown. Maybe not necessarily, it's called a recession in here, but I would like to say a slowdown. So, and mostly within your development. And so we've applied that slowdown to the baseline forecast, and then that moves forward in all the other forecast scenarios that were used here.
Does this reflect the new fees? Did it take into account the new fee study? Like on permits and things like that? I don't know if is it just going off of raw numbers, or is it looking at?
So this is, well, yeah, but this is what are we seeing as far as what's coming on, moving on in the future? Whereas the fees more cost of service and what is required for meeting those costs.
Question?
Yeah, go ahead.
So in a year where there's a lot of turnover in real estate, tax assessments, cities and counties like it when people sell homes because then they assess it at a higher amount. Right now, that volume is low. But does that is that a calculation in that or something that they look at to come up with that 2%? Or are they just looking at just an assessment increase of, or value increase of 2%?
They look at historical, but then they also look at what they're seeing in the market when they do their projections.
So they are accounting for
Yeah.
turnover and so forth? Okay,
correct.
because that turnover is going to be a small impact,
Right,
you know,
and they
this year,
do,
but.
and on a quarterly basis, they actually do their analysis, and it is, it's complicated in a way, but it does kind of get into those different details of what
Okay.
they're seeing quarter by quarter.
And then in a really bad market, when the values drop dramatically, and I'll use 2008 for an example, I've heard about a lot of property owners would go to the county and ask for a reassessment at a lower price. And the county has done that, but it takes time for it to kick in. We're not in that scenario now, but if we were, would they look at that potential as an impact as well? And maybe that's a negative going to, you know,
They would, and they have addressed that, so that's not something that they include in here, because it has very rarely happened. I think the last time was within the
Yeah,
Great
well.
Recession, right? So,
that was a long time ago now.
yeah, and then prior to that, it was, I want to say it was many, many, many years prior to that. So, but they do. If they believe there was a risk for that, then they would include that in projections. But from what they're saying now, they don't believe that's a risk.
Okay, and the lack of housing is keeping things kind of high on values too.
Exactly, right.
Yeah.
There's still a demand. There's still
Yeah.
a demand.
Okay, all right, thanks.
Any other questions or
Okay. And then this is just some more assumptions that were used in the different types of revenue. And again, anything that was development related, we went ahead and highlighted, because in the baseline, we've already reduced that, assuming that there's a slowdown taking place. For development, yeah, and it's called a recession in here, but again, it's more of a slowdown,
Right, okay.
yeah.
So it isn't an economic recession.
Right, they haven't hit it as far as hitting sales tax or anything like that, but what they have hit is the development. Oh, did I go too fast? Did I skip something? Okay, and then there was one more slide, right. So these are additional revenue sources that we're each looked at for each line item. A lot of these are flat line because they don't increase much year by year. And so with that, we'll get to our baseline projections. What we have here is what it looks like. There's been a large increase in sales tax. All those the sales tax that has come in, the increase has not fully been programmed. And so that's your delta for what the difference is of your surplus at the end. And what we had the consultant do is we had them say, okay, what we're looking at right now, we're in the process of building our next fiscal year budget. So if we took what the enhancement requests from the departments are and we plug this into this baseline projection, what does that look like? Will there be capacity for these enhancements? So we had them do that. So this is without the enhancements, and then in the next slide, we have it with what it looks like with all department enhancement requests. And so those enhancement requests will be brought to City Council on, when we're doing the first budget review, and the council will get to see or hear from each department on what their enhancement requests are. And then City Council ultimately makes a decision on whether or not to include those. But again, we wanted the consultant to say, okay, if we did include this, is there capacity? What this does not include is the discussion of maybe a debt service or some sort of payment on a police station. And so that is not included in these numbers. Are there any questions with the baseline before I move forward?
Yeah, just a quick question. Does this plug in, I'm assuming that our cash revenues is plugged into this and that surplus is in excess of that?
Right. It's your delta between your revenues and your expenses.
Okay.
Yeah. And then we had them say, okay, different scenarios, right? And so if we have a actual recession, so not the slowdown that's already been programmed into the baseline, but an actual recession in fiscal year 24, 25, what is that going to look like? And so you have your projection that has just the recession programmed in. And then on the next slide, we have it with the enhancements included as well. And so that's it. It's still a positive overall outlook. Again, the reasoning for that is that sales tax is not fully programmed, and so there was such a large increase in sales tax for the city.
It's a good time to be in Beaumont.
And the other scenario is, okay, well, if they somehow figure out a way to not have a recession in 24, 25, are we going to have one in 27, 28? So they did a model based on if there was a recession in 27, 28, and then also, again, what that looks like if you included all the enhancement requests. And so this is what it looks like, just a recession in 27, 28, and then if you were to include those enhancement requests. And then, again, this does not include any type of future decisions as far as maybe funding a police station or anything like that. So I believe what we had put in last year's long-term forecast was a $3 to $3.5 million debt service payment is what it would look like if you were to finance.
Annually.
Right. I believe we were at a $50 million at
60,
the time to come up with $3.5 million debt service. So Right. So this number does not include any future decisions on any type of large capital projects like that.
Okay.
So I have a question. Let's say there is a recession. So if there's a recession, does that change the assumptions? Because like these costs will go down if there's a recession. You're not gonna, I think that if we enter into a recession, that would probably change our assumptions.
So some of your costs would decrease, but a lot of your costs are fixed or would increase. And so a lot of that would be like personnel and things and pension and all those kind of things. Yeah, right. So the focus is less revenue. So what does it look like if you have a recession and you're going to get some of your areas are going to have, come in less than what you would normally get because it's a recession. So sales tax, they pull back on spending, things like that. That's what the forecasts typically focus on. And it's a conservative approach to keep your costs the same because you want to make sure you have enough funds to cover those costs.
Now, I note in here that it's a scenario of what if there's a recession in 24, 25, and then a recession in 27, 28. Does that take into account that whole timeline? So meaning it would be a recession 24 through 28?
No, so it would be if
it's
your
delayed.
baseline, and then it would just be, so there's one scenario is that the recession's 24, 25, the next scenario is that the recession's 27, 28. They're not together.
Got
So
it.
it's not included in each or the other.
Perfect. So not as if so it's showing that would be that pinpoint moment in time.
Right, exactly. And so what we're looking for recommendations this evening from the committee is that, number one, are there any assumptions you feel that need to be changed? If we should, reprogram something on the assumptions. And then number two, what scenario are you okay with the baseline moving forward for budget planning and to move forward to city council? Or would you like to include a recession and which recession scenario would you want to include moving forward for budget planning?
So I have a question on that. So are we safe in saying that if it was a recession, that it's only a 1-year recession, or do we look at a 2-year model on it? Because I think if we hit it, it's going to take a little longer to pull out of it.
So if you look at it, they have programmed in a slower, so there is a 2-year period with the growth then coming back.
Which is,
It shows a recovery coming back in 26, 27.
hey, John?
I'm on 201.
Okay.
If you're looking at the 24, 25 recession, it shows you going into 25, 26 and essentially coming out 26, 27.
You'd be 26, 27 numbers
And then-
are higher than the 23, 24, so it would take that time to pull out of it.
Correct. And then
Right.
you're not coming back to your baseline until 26, 27.
Gotcha, okay. All
Showing
right.
you at 68 there. I think if you looked at it with the enhancements, you're really kind of looking at similar. I mean, it stays stagnant the whole way through both scenarios because you're looking at revenue, like she said.
So do we just title the slide, instead of saying recession in 24, 25, that we say with recovery in 26, 27? I mean,
We could do that. I mean, or the explanation could also
Yeah.
just be
Yeah,
there
we can
too.
explain
Yeah.
that. I mean, what does the committee think the recession, if there is a recession, what is likely?
Well, from my reading, it's, well, the assumption of the economists is that
Chairman, I'm sorry to interrupt. We're not catching your audio. Can you adjust your mic or make sure it's
There we
on?
go, got it.
Okay, thank
Perfect.
you.
Okay, thank you. Thank you, sorry about that. So from what I've read, the consensus is like a 1 year, 1 year shallow recession if there is one.
In 24, 25, or what have you read?
This is just the consensus just from my reading. I read a lot of economic material, would be probably, I guess, like 24, 25. I mean, the Federal Reserve will react to that by cutting interest rates, and so you'll start to see. I mean, I think the biggest thing here, this is my biggest concern, is how often can we come back and update these expenditures?
Annually, well.
It's an
the-
annual thing.
This
Okay,
is
you
an
have to
annual
do it
thing. You
annual.
should be
Okay.
having long-term financial forecast discussion presented with
Right.
every budget year and then reviewing this. And the purpose of that is before that you start, programming for your next fiscal year budget is to
Right.
look at what the impacts are, what's coming up, and are you going to meet your obligations? What is it looking like as far as the city's finances moving forward?
Yeah. I mean, I don't know if I foresee. Yeah, I tend to agree that that's probably
Yeah.
not a likely scenario.
Which one, I'm sorry, which one was
Yeah,
that?
I was just making the comment, just, I think there's been talk out there about a possible recession for more than a year.
Yeah.
They've been talking about it for a long time, and
Right.
so we've got time to react and plan ahead, so
So are you saying stick with the
So I'm
24,
thinking
25 with
yeah.
the enhancement?
I think so. I'm good with what's presented.
Question. Also, this will be another report till next year, right?
I'm sorry?
There'll be another report till next year for this.
Right, so this will be an annual planning thing. So we're doing it
plan.
now for the budget process that we're in now for fiscal year '24. And we're gonna say, okay, we'll use these assumptions, we'll use this model, we'll plug in any, decisions from council on the budget. And then that projects for how long? We bring it back at the next budget planning cycle, and then we refine it. Yeah, and so it's constantly going to be a moving document year by year.
So I think you'll be safe.
Yeah, I was just
Yeah.
gonna say,
We're
I
half-
think.
half the year already almost gone.
Yeah.
So-
Well, I think if you go with this model too, I mean, if we undercut and we're more conservative, right? And then we come out better on the top. So
It's a conservative approach.
correct. Yeah. So I would agree.
Yeah, I agree with that. Now I see where you guys are getting. That I agree.
Okay, and are we good with the assumptions?
Are you good with the assumptions? Yeah.
Yeah. Yeah, yep. Any other so we're going with the 24 to 25
With enhancements, I think.
recession with enhancements.
Okay, great, thank you.
Do we need a motion
do I
to
need
move
a
to council?
Direction is fine, right? Is that what you were looking for, just direction?
Well, it was to either change the assumptions or to approve to move forward to
Oh,
city
I see.
council. Yeah,
Well, are there any questions
the scenario
about
that
the
they, of their
assumptions?
choice.
I mean, are
Right.
there any issues with those? Those look good to me. Assuming that the Federal Reserve does what it should be doing, then I think that looks good to me. And obviously, the thing is, you don't know what exactly is going to happen until it happens, so then you have to go back and change that.
So just to confirm then, if we're recommending to council, it's the scenario, as Ms. Voigt pointed out, the recession 24 to 25. Do we bring it to council what we think a recession be in 2027, or 27 and 28, or we just trim it off and send that one with the 24, 25 with enhancement?
Right, so it's expertise of the finance committee on what scenarios
Okay,
should be used in the
gotcha.
budget planning process, and then It's more so of, putting it in the documents of what was used for your long-term financial process. It'll be in your budget book. That goes with the budget. And then just to show that there's available capacity for any decisions that city council makes as far as budget goes.
Okay, and I understood that we all agreed on the 24, 25, right?
Yeah, I
Okay.
think that's a good conservative
Yeah.
approach. I agree.
Okay.
I can make a motion if you want.
Sure.
Okay, I'll make a motion to approve the long-term financial forecast scenarios and assumptions to include the scenario of recession with 24-25 with enhancements.
I'll second.
Member Sierra,
Yes.
Member Garcia,
Yes.
Chairman Vanderpool,
Yes.
Councilmember Voight,
Yes.
Mayor Pro Tem Finn.
Yes.
Thank you.
Okay, so next up is the subcommittee report here. So I kind of wanted to talk about this a little bit. As the subcommittee has grown smaller, right, with reorganization, do we want to have the same amount of subcommittees that we currently have? I mean, some of this obviously is going to be the priority of council. What are council's top priorities in terms of subcommittees? Some of them, I think, have already been completed, or have those been knocked off the list? Let's see. Reserve policy, CFD, training. Like the Financial Training Committee, well, where are we with that, Jennifer? Let me just throw that out there.
Oh, we did our presentation.
Yeah,
And it's
so
on the
we're-
website, so
Okay.
yeah. And bond accountability as well, too. There was a document that came out from that, and then it's
Bond
posted on the.
accountability.
Can we remove those then, since it's kind of accomplished and moved on?
Yeah, I would think so, but
Okay.
I'm just trying to,
Bond accountability.
Yeah,
And the
Financial
financial
Training
training.
Committee and Bond Accountability.
Can we go into each of these so we can understand them, maybe? The Internal Control Committee, do we know what that was?
Wasn't that as a result of our audit and the committee reviewing the audit findings and just double checking that staff made the proper recommendations and so forth and move forward? So that's kind of that'd be more
like
of an
an
ad
ad
hoc
Right.
at the time, of the
Correct,
budget.
Right. If
or
you have
the-
any new
the
audit
audit comes out.
findings or anything
Yeah.
like that, yeah.
So I would say that would be well, I don't want to say a standing committee, but
Kind of an ad hoc.
standing, or ad hoc as needed. So I think that can remain.
Do we need to assign new people to this then? To each of these? Oh, go ahead. Okay. Decide what we need to keep and then go
Okay.
from there.
So,
Okay.
so far, we're going to keep Internal Control Committee, correct?
we're going to keep that, okay?
Yeah.
Yeah.
And then I can give a report on the CFD training and FAQ committee. So, Mr. Vanderpool and I were on that committee, and the goal of that is to be more transparent with the public
that's right.
on what the CFD taxes are by parcel or by home. And we started by hiring a internal GIS analyst for that, started work on it, realized that we have through our CFD bond council people, if I'm calling it right? Special tax folks, that they have a software program and we didn't want to reinvent the wheel. And so we have assigned that task to that contractor and just waiting for an update as to where they're at. But the vision of it would be it'd be a mapping system or a search by address on the city website where they can type in their address. It would pull up all the information of each of the CFDs assigned to that property, along with a maturity date and also any potential payoff if somebody wanted to pay that off. And then it'd be a line by line item. So we got to the first layer of using my home as an example and saw that 2 of the 3 CFD taxes associated with my property were on there, and then we switched to the other contractor. So that's still in process. I think we have a goal of having that done by the end of the calendar year. And then if Ms. Gibbs, do you have anything that you need to add to that of where we're at with the contractor? Or?
I actually spoke to him today, if
Okay.
you want me to update.
All right, super. Thank you.
Yeah, they're in the process right now of all the data collection. They audit all of the data they have from the previous consultant, so that they are, not that anything was wrong, but just to make sure that they're confident in what they have moving forward. They're working right now on the budgets and preparing for the tax rolls for next year, and they do that parcel by parcel audit. In the meantime, they are building the city's, say,
So they would
GIS
be the one that would
area.
be doing the website building
Yes,
for that?
yes,
Okay,
yeah, so they
super.
are currently building that with, planning to have it out by the end of the calendar year. The goal would, ideally, it would be out in October, is what he's telling me, but, you know, hopefully that's not too soon. It's sometime between October and December that
Okay,
that would roll
and
out.
then my thought, and correct me if I'm wrong, is that that committee then would not need to meet until they're ready to do like a beta test and show us, hey, this is what it looks like before we click the publish
Go.
button on the website,
Yeah,
correct?
correct,
Okay.
correct.
All right, thank you.
Yeah, I know personally, I would definitely like to have access to that information, so thank you for pursuing that. Okay, so RFP committee, that seems to be something that, you know, when RFPs come up, we're just, usually it's, me and Dennis usually end up kind of just taking that on, but obviously, we got a new member, so he can be a part of that too. Do we want to just do that on a as, you know, who's available basis at the time?
That's how we've been handling it,
Right.
but I wasn't sure if you wanted to assign two people. I think generally we send out an email, Nicole, and the first two people to respond are the winners.
So if I could ask just a procedural thing, that if we have our volunteers for just a follow-up email to say, we've got it covered. Because there was an instance where I was like, well, I don't think I can do it. And then I didn't hear back, and I was like, well, did they find somebody? Did they not? Am I still needed? You know? So just a quick follow-up, say, we got it, you know, and this is when we're meeting or something.
Yeah, and we'll do that, so I want to make sure everybody, we're not communicating amongst the body, everything needs to go through Nicole.
Correct, yeah, so for our new folks, to stay within the Brown Act, so for example, if Nicole were to email us as a group, or sometimes we're emailed as a blind copy, then just we reply back to Nicole with our yes or no, or, and so forth, and then if staff can then email back, say, we got it covered, then that makes me happy, so. So then that one, so I don't know, I don't think we need then to assign anybody, is that the general consensus?
I feel like it's been working at this point, and
Okay.
I'm okay with just doing what we've been doing. I haven't seen any issues.
Does that work for staff too, or does that give you a headache, or?
No,
Okay.
I
all
think
right.
it's actually quicker.
Okay, cool, okay.
So we've got that committee. Then we go the other three committees, and let's see what we think about those. Reserve Policy Committee. Can you, let's have Jennifer explain the purpose of the committee, and then we can kind of talk about it. Let's just have what we do.
And some of these I don't think ever really got moving forward. I do feel like your reserve policy, you've kind of just already approved that
We just
within the
did-
policies.
Right.
Yeah, so, and with the discussion we've had with city council on the reserves, so I'm not.
So that wouldn't need necessarily be a subcommittee, that would be just,
right,
we'd
some-
all discuss it together.
Right.
Yeah, okay, so dissolved on that one, okay.
CalPERS liability.
Yeah, and that one never really got going either. And I think that was just to review the annual unfunded liability by CalPERS. Council has addressed that with a pension 115 trust and putting contributions into that, it's PARS, it's into that contribution to help with that long-term liability that's out there. But the committee actually, I don't believe, ever met or got started, from my understanding.
Okay. So I guess it would come down to council. Do you want to continue with that? What are your thoughts as far as that committee is concerned?
What is staff's recommendation? I mean, it seems like it's satisfied within bringing it to the council. Do you feel like that should be ran through the Finance and Audit Committee to just review their investments, or?
And I think on an annual basis, looking at
Maybe it just
the
comes
pension
back to this
liability,
whole
bringing
group.
it back maybe with some CalPERS updates and things like that wouldn't be a bad thing.
So maybe just as a presentation to this committee?
Yeah, it could be presentations
Versus
committee,
a
or maybe even an
subcommittee?
update, presentation committee first, and then an update to
And
city
then we
council.
can recommend the update.
Okay.
Right.
So again, all right, so.
Dissolve.
So whole committee, not subcommittee. Okay, so that can go.
So that one we can knock off, and then the last one is long-term financial sustainability. That obviously, that is an important topic. So what are your thoughts as far as that?
We kind of just did that as well.
Yes,
So
exactly.
and I think on an annual basis coming up and working with the committee, and the committee is a
Yeah.
whole kind of,
And so a little history behind that, we had the committee trying to come up with hot topics that they felt that the council thought was important. And then asking for the council for direction, and then not a whole lot of direction, I think, came back. Because we were kind of on top of things, and right at the time, we had a very positive audit report that came through and so forth. So that, I think, led to perhaps maybe we only need to meet quarterly as this group versus every month. And so it
And I
kind of
do
molded
think-
as we went.
right, and I do think that since it did go to a quarterly basis versus a monthly basis, there's going to be a little bit more meat to the meetings going forward on a quarterly basis, rather than on a monthly, there was not as much to review.
Okay, so then I have three remaining, correct me if I'm wrong. We have Internal Control Committee, CFD Training, and the RFP. Okay.
So,
Yeah, and so, Mr. Vanderpool, you and I are on that. Do we
Yes.
want to keep that?
yeah, I'm good
I
with
don't
that.
see any, well, I mean, we don't want to, we can't have a majority to begin with, and I don't think there's going to be much until we get the update, so.
Right.
But certainly like to continue to have your input.
I
Because
would
I'm
love to be
biased as a
part-
real estate agent, I know what to look for, but I want a member of the public to see it and go, does this make sense to you? You know, and so forth.
No, I
so.
think that's a good idea and good
Okay.
information, so I'm happy to be a part.
So then for members for that is myself and Mr. Vanderpool for that. The RFPs, that's as needed. Do we need to assign anybody to the internal control?
Well, that would be, I usually will volunteer for RFP, so I'm fine with doing that. And I'm a part of course, CFD and, FAQ. So,
What was the internal control again?
It's on, if any audit findings were to come up on internal
that's right.
review, so it'd be.
I can volunteer myself for that one.
Okay.
And then,
and then we would mind having, one more? Dennis or?
or Peter, or
Yeah.
Peter wants to get involved?
I'd be welcome to do that.
Okay. Because, yeah, usually it's me and you that do RFP. So, yeah, you can go ahead and throw on that.
And then just an explanation on that. So is that, as those audit findings come out, then the subcommittee meets with staff, reviews that, what needs to be done. Staff reports back what processes they're working on to implement those. And then when those are finished, then they report back to the council that it's been reviewed and so forth and so forth. That's kind of the general job description for that one.
Perfect.
Okay, so just to be sure, I am up to date here. So we have Jessica and Peter with the internal control, me and Councilmember Fenn for the CFD training, and then RFP is kind of as, yeah, whenever, whoever is available kind of thing. That sounds good to me. Does anybody have any comments or concerns regarding that? Yeah, I think that's good. Okay, so what is the action that we are supposed to take here? It does not say, so are we just kind of just
It was just discussion.
a discussion? Okay. Then I think we're good there. So moving on here, treasurer review, treasurer isn't here, so I don't know what we do there. Do we just not?
There will be a one-on-one meeting
That's
with the
like one-on-one
treasurer
meeting,
and
okay.
finance.
All right, then next would be finance director comments.
Yeah, so I'm not going to talk your ears off any longer. I have provided a project update of everything that the finance department is working on within the agenda. You can feel free to review that, and if you have any questions, feel free to come back and email us, ask us, and we'll be glad to update you on anything that we are currently working on.
Okay, thank you, Jennifer. We appreciate all of your hard work putting this together. It helps make the numbers a lot more manageable, so I appreciate that. All right, so I think with that, we can adjourn at 7:21.
Thank you.
Yes, thank you.